This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed. This is Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City. What a week. So much going on. And then you take a look at what's just going on this Friday. We've got a global bond sell-off. We've got yields surging from Japan to the United States, rising oil prices once again, spooking investors. We've been talking about this a lot around this table, but you definitely saw it play out.
It's almost like it's finally catching up.
Yeah, I mean, you look at the
oil prices
charts.
have been high for 11 weeks.
Well, and everybody says, listen, none of this is going to go away, right? Anytime soon. People are talking about the end of the year. They're thinking about higher gas prices, and all of that plays its way through the economy. Okay,
so that's just part of the backdrop. We got a great roundtable to talk about this global bond sell-off and the macro. Priya Misra is here from JP Morgan. Martin Norton joining us too from Empower.
Looking forward to that combination. And it's a wrap on President Trump's visit to Beijing, what you need to know. We're also going to get into how Andy Jassy is rewriting Amazon's playbook for the AI age. It is the cover story of Business Week.
Brad Stone going to be joining us. He literally wrote the books on Amazon. So looking forward to that conversation. Also, a read on the consumer.
Yes.
Food costs.
Yes.
Wine costs.
Spirits costs.
And what our summer picnic might look like and might cost.
With Blake Leonard. She is over at Stu Leonard's Wines and Spirits. She's president, but she's getting ready to take over, co-take over, I should say, and lead the company into the next generation. Let's get you going, though, with a check on that trade, including what we're seeing in the Treasury trade here in the U.S. Here is Charlie Pell.
Hi, thank you very much. Lots of red on the screen today for the Dow, the S&P, and NASDAQ. Pulled back from records, but interesting to point out that it looks like, as of now, that we could see another up week on the S&P 500 index. Here's what's going on right now, though. Red on the screen with the S&P down 49 at 74.51. This time yesterday, we were right around 7,500. A drop today of 0.7%. The Dow Industrials down 403, drop there of 0.8%. And NASDAQ lower by 194, drop there of 0.7%. All of this with the VIX back below 18 and the 10-year now at 4.59%. The 2-year, 4.08%, and the 30-year, 5.12%. Our coverage will continue. Right now, we've got spot gold down $92 the ounce, 45.59, drop there of just about 2%. Crude pushing higher, WTI 105.13 a barrel, up now by 3.9%. Brent crude 109.07, up now by 3.2%. So bottom line here, stocks are falling as inflation jitters lift bond yields. Bill Ackman says Pershing Square has built a new stake in Microsoft, taking advantage of a decline in the company's share price to invest in a business that he says is stronger and more resilient than investors think. Microsoft shares are up now by 4.5%. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. At last check, Aldridge Polgieter of South Africa sits atop the leaderboard right now at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, and we'll be checking in with Charlie throughout the hour. Want to get to a bunch of stuff that's going on, but before we do that, we kind of need to set the macro of one of the big stories of the week, and that was the meeting between U.S. President Donald Trump and, of course, Chinese President Xi Jinping. There were a few deals, I feel like a pledge of stabilization, Tim, but the risk for both, and it was very clear, is Taiwan.
Taiwan, also Iran. That's a side issue as well. Just a meeting between the leaders of the two largest economies in the world. Investors, though, I think, want more. On the ground with the president throughout his trip, Bloomberg News Washington correspondent Tyler Kendall. She joins us from Beijing. Tyler, what was the most important takeaway from this meeting?
Well, Tim, I think you guys just hit the nail on the head there. It appears that the takeaways have been dominated around developments when it comes to Taiwan. We had Chinese state media reporting right after President Trump took off from here in Beijing that China feels that Taiwan is the #1 issue in the U.S.-China relationship. Now, U.S. officials made very clear that their position on Taiwan has not changed, but President Trump did appear non-committal when pushed about a $14 billion weapons package that has been queued up. And we're starting to see some pushback from Taiwan, even breaking within the last hour or so a reported statement from Taiwan's Foreign Affairs Ministry urging President Trump to move forward with that security assistance. That was really the biggest point of contention amid a summit that we saw both sides really trying to push forward this idea of strategic stability. And perhaps that's the other big takeaway here, which is that the dialogue is going to continue, and it's going to need to have to continue because we're still waiting on a lot of details about some pledged investment deals or purchase commitments. In fact, you saw soybean futures falling because there was this expectation that we would see a firmer announcement around agricultural purchases, but that never ended up materializing. So a lot of big questions here. Yes, we got that Boeing deal, but there was an expectation that we could see some sort of breakthrough around NVIDIA H200 chips since Jensen Huang was on that trip. That didn't happen either. But Tim and Carol, both of the sides did seem to commit that there will be this U.S.-China Board of Trade and Board of Investment. But again, that is just basically a commitment to kickstart the process for that more formal mechanism to usher in more trade and investment between the two countries. I will quickly add that we did get confirmation from China earlier today that Xi Jinping will travel to the U.S. this fall.
Promises, and lots of pomp and circumstance. We'll see ultimately how this all plays out. Tyler, we know it's been some long days for you. We really appreciate it. Have a super safe trip home. She is, of course, our Tyler Kendall. She's there in Beijing for Bloomberg News. All right, so investors maybe not getting all that they wanted with the meeting between President Xi and President Trump. I think some were looking for more deals. What investors, though, did get today, a global bond rout as investors shed government bonds around the world, propelling borrowing costs to multi-year highs amid intensifying fears that war-driven inflation will force central banks to pursue higher inflation and higher interest rates, I should say. And I got to say, you're seeing it play out. There's a little bit, Tim, of a pullback in terms of the equity side of things. Not necessarily coming undone completely, but some of the high flyers that are certainly
the stocks.
Yeah, exactly. are much more sensitive to higher interest rates. You're definitely seeing a pullback. So let's get to it. Priya Misra is with us, portfolio manager of the JP Morgan Core Plus Bond ETF, here on set with us in New York City. Also, Marta Norton, she is chief investment strategist at Empower, and she is in the Bloomberg News Chicago Bureau. We do have a lot to get to. Priya, I've got to start with you. 10-year real yields headed for 7-week closing high. You just look around the globe and you see this rising rate environment. I do think about it. Is it just something that goes away if this U.S. war in Iran stops, or not necessarily?
Not necessarily, because, we need the strait to open. So the strait's not open, which is why energy prices are rising. We also need the global, so there's a global term premium increase. You see this in UK, you see this in Japan, now you're seeing this in the US. I think concerns around debt and deficits, that's a global issue. That's why
and
term
that
premiums
doesn't go
are
away like that.
Exactly. Wars are expensive. Wars are inflationary, wars are expensive. It's not clear that, sort of governments have figured out a way to deal with this debt. So I think that is with us. I think the rate range is higher. I do think that the rate move has now reached sort of more of a, I would say danger zone, meaning now risk assets are paying attention to it. I think there's a self-correcting mechanism here. As you see the tightening in financial conditions, I think then the market starts to move from, is this just inflationary to is this stagflationary? Do we start to see that growth impact? So I think now every other market's paying attention to the bond market. The fact that we've sort of broken those psychological 4.5% on the 10-year, I think now it becomes a little bit more dangerous, not just for the bond market, but also for the broader risk complex.
Well, that's a perfect segue to bring in Marta Norton of Empower, where she's chief investment strategist. Marta, as Carol mentioned, some of the higher flying areas of the equity market taking a little bit of a hit today. The stock's down about 2.2% right now. I'm curious what you're seeing in the macro that's supportive of stocks or not supportive of stocks. What's your view?
Well, I think when we're looking specifically at those high-flying areas, I mean, the rally has been fierce, not just from April 1st, if we're looking at, a semiconductor index somewhere around 55% over this short period, but over the course of 2026, this has been one of the areas that investors have flocked to. So I think the idea that we would see a pullback in some of those areas that have just been bid higher, I think that makes sense regardless of what's happening in the bond market. But there's no question that when we start to think about higher rates, of 4.5 on the 10-year. That, of course, is an impact to borrowing costs, and that's a concern for valuations. And valuations outside of select areas, valuations for the broad U.S. market are not all that cheap. So I think there is some risk more broadly to what we're seeing in the bond market.
Well, Priya, come on back in here, because I think we keep talking about this disconnect between records on Wall Street versus sentiment not so great. We saw inflation numbers, of course, this week, and we're just trying to make sense of what's right, why the disconnect. How do you reconcile the differences?
So I'll say 2 points there. One is the AI revolution that we're under. I think we are somewhat hypnotized by the fact that we're seeing AI earnings, we're seeing AI capex. If that's going to revolutionize the way we do business, and you're seeing companies, invest a lot, earn from it. I think that's the reason why equities have done so well. You take AI out, capex of the rest of the economy is actually not that strong. The cyclical sectors, I would argue, the labor market is stable. It's not decelerating, but it's not exactly re-accelerating. So I would say that's one. The other one is the K-shaped economy. I mean, there's a lot of evidence. The New York Fed's done some great work to show that K-shaped economy is at play even right now. The upper part of the K is able to continue to spend. The lower part of the K, that inflation really starts to bite. At what point do the tax refunds sort of run out when the lower part of the K continues to weaken and the upper part starts to falter? I think that's the point where, that disconnect that you're highlighting starts to unravel, because then, we have to question, okay, the AI thing might still be ongoing, but the rest of the economy is now starting to struggle with the energy prices.
Priya, it's something Tim and I talk about. Like, when does those who are struggling start to have an impact on this economy, and we start to see it play out? Marta, come on back in, because the AI trade, though, has been tremendous, the CapEx, and we increasingly see, the big hyperscalers tapping the debt market to pay for all of this. Was it Alphabet, $3.6 billion selling of bonds in the biggest ever yen deal by a non-Japanese company? Yes. They've raised close to $60 billion. Okay, I get that. But when the rest of the economy, or a big chunk of the economy, isn't enjoying some of that spend or that exuberance, doesn't that come to roost at some point?
Well, it's so fascinating because it's not something that we're used to seeing. When we think of the U.S. economy, we think of the U.S. consumer. And now all of a sudden we have this dark horse running alongside with AI spend, and we see that in the GDP numbers, right? We're seeing way more spend from the AI side supporting the U.S. economy. And what I think is really interesting in this is that we can have some pressure on the U.S. consumer, and yet I don't think that necessarily means that the AI capex slows down. So we almost have this second engine to the economy that I think maybe gives the U.S. economy a bit more shelter, or maybe more resilience than what we would expect overseas, and potentially means that some of these areas within the AI trade still have some value, especially those that haven't been bid to the same degree as say the chips.
Marta, if I can just question you on beyond the AI side, when you think about companies, you think they can pass on the cost increases? Because I think that's what it's going to come down to. As we're thinking about, will the Fed have to come in and hike? If you start to see core services inflation starting to pick up, or core goods inflation pick up, you think companies have the ability to price to increase prices here?
Well, what's interesting is, we did see the PPI number and the CPI number, and we see this major move in PPI. And the question, to your point, is whether we're going to be able to see those companies pass along the price increases. Now, maybe there is some cover in the sense that inflation is high and companies can arguably justify, hey, inflation is high, I need to pass along a bit of the price increase. But there is a little bit of just fraying along the edges for the consumer. So I think there could be the the possibility, like we've seen in the past, where companies do eat some of the pain from inflation, but earnings are quite strong. And so maybe there is the potential for them to eat some of the extra cost pressure, but maybe not see earnings collapse altogether.
Priya, one thing that we are promised as folks who, I guess, whether we like it or not, if you buy an index, this is what happens. Productivity increases as a result of these investments. When will we see those, if we haven't already? And how will they materialize broadly?
Great question. And one that actually, it's important for the macroeconomy. It's also important to understand what is neutral rate. Because if you listen to the new Fed Chair Warsh, she's talking about these productivity gains actually potentially lowering that neutral rate. I go back to the 80s and 90s. We had the computer age, 80s, 90s. Robert Solow actually came out and said, you see computers everywhere except in the productivity statistics. It takes a while for that to show up because, number one, companies have to start to absorb AI. Number two, you have to restructure business processes, and then it has to show up in the data. So number one, I don't think we're seeing it in the data. If you look at the productivity statistics, they are high, but they are high across the board. They are high because companies realized after COVID that they have a shortage of labor, they have to automate. I think that's what we're seeing in the productivity statistics. We're not seeing AI. It could take a while for that to show up. So, and again, then it has to be measured as well. So I think right now we're in this sort of low hire, low fire. We're seeing GDP statistics being high because it's driven by CapEx. Let's start to see AI being adopted by the rest of the business world, corporates that are not technology focused. And then we start to see what are they doing with labor to get a sense of, are we seeing it in productivity? I am a long-term AI productivity bull. I just think that might be 5 years down the road. And it could take us a while to figure out how, do we first actually invest a lot more in order for us to use that AI before we start to say, here are the productivity gains. So I think we're a long ways from there.
Well, more to come on back, because I do think we are also, we're watching this spend. There's a lot of excitement. It does feel like it's going to take some time. Is there any signs where you see that AI trade a bit stretched? Some questions out there, especially where we have Cerebras, coming out with their IPO. Might they challenge, NVIDIA? I just feel like it's early going that maybe some of the leaders today might not be the leaders of tomorrow.
I mean, absolutely, that's the case in my view. It's very hard. We're in a very long race. So when we're looking at a marathon, we don't know who the winner is at the second mile or the third mile. We really have to get closer to the end game. And I think that's absolutely right, that when we look at AI deployment, we're very much in the early stages of that. Right now, I think a lot of companies have employed some measure of AI work to help improve maybe some PowerPoints and the like, maybe some research processes, but we're not really seeing it embedded in the workflows. And when we think about the AI trade, it has broadened out over the past year. So, we've started to include memory chips, obviously, in the AI trade. But the real broadening out is when it extends to the broadest of the economy. And I think we're still a ways off from that.
Just got about 50 seconds, so 25 to each. Marta, first, we've got NVIDIA, we've got a G7 meeting of finance ministers. What are you watching out for next week?
Well, I can't help but keep my eye on NVIDIA and just see what this looks like as we get that final mark on the AI trade.
Yeah, I agree. Sentiment will definitely be affected. What about for you, Priya?
Retail earnings. I want to see what are companies doing. Are they able to price, extend those price increases? Are they eating it in the margins? Because here's the thing, the labor market is not allowing consumers to pay a lot more. Wages are actually decelerating while we know inflation's picking up. So is it a margin story or is it actually inflation picking up?
All right, good stuff. Can you guys just come back every Friday? Please?
Absolutely.
Okay, well, we would love it. Really appreciate it. Of course, Priya Misra joining us right here. She's portfolio manager of the JP Morgan Core Plus Bond ETF. Marta Norton, chief investment strategist over at Empower out there in Chicago. We're coming back in just a moment.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all declining. Stocks are falling as inflation jitters lift bond yields. Right now we got the 10-year 4.58%. S&P pulling back from a record yesterday, holding above 7,500. Right now 74.41 on the S&P, down 60. Drop there of 0.8%. Dow Industrials down 462 on the Dow, a decline of 0.9%. NASDAQ and the NASDAQ 100 index also retreating from records. They are both currently lower by 0.9%. The Bloomberg Mag 7 index is down 0.6%. All of this with the VIX just above 18. The stocks, by the way, the Philadelphia Semiconductor Stock Index trading lower by 2.6%. The 10-year 4.58% now, with the 2-year 4.07%, and the 30-year at 5.12%. Gold down 2%, $45.56 the ounce. West Texas Intermediate crude up by 4.1% right now. WTI $105.34 a barrel. Barrel of Brent $109.33, up now by 3.4%. A day after its 68% surge in its first day of trading, Cerebras Systems giving back some of its gains yesterday. Right now, that stock is lower by 4%. Round 2 of the PGA Championship underway in Newtown, Pennsylvania. At last check, Aldrich Palgiter of South Africa sits atop the leaderboard at 4 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Well, it is one of the largest market cap companies. In fact, I think it's the 5th largest. We're talking about Amazon, founded by Jeff Bezos. He's still chair. It's now run by CEO Andy Jassy. He's now 5 years.
I can't believe that.
Since he took over as the chief executive officer.
It seems like just yesterday.
It does. Oh, how time flies.
It really does.
Hey, and what's interesting is Jassy was, as Brad Stone writes in the cover story of Bloomberg Businessweek, he was once Jeff Bezos' deputy and the head of Amazon's cloud computing arm, massive computing arm. 5 years into his tenure as CEO, he's killing projects, cutting staff, pleasing Wall Street, and steering the everything store through its greatest challenge yet.
His impact and role at Amazon. It's the cover story of the new issue of Bloomberg Businessweek. It's also the Bloomberg Big Take. For more, let's head to the Bloomberg News San Francisco Bureau. It's where we find Brad Stone. He's the editor of Bloomberg Businessweek magazine. You can read it online at Bloomberg.com, on the Bloomberg, and pick up on newsstands. Brad, also the author of several books, too, about Amazon, including The Everything Store. Brad, so much coverage when it comes to Amazon, especially of the post-Bezos era. The thing that I want to know is why Andy Jassy still drives himself to work every day in a 1998 Jeep Cherokee. Like, seriously.
Is the Maserati at home?
I mean, but
What's
also like, even, I don't know, like, I thought CEOs these days, from a security perspective, like, everything was so tight and secure. And like, I know Bezos had a minivan for years too, but anyway, that's something
I thought that was interesting. They've got these corporate values that they promote internally and externally. And one of them is frugality, the idea that you're saving every dollar for the customer. Walmart does the same thing. And I think the way, Andy's such a Amazonian. It's where he's worked his whole life. He embodies the principles. And so I think it shows up in his personal choices, which include, he wore to the Businessweek photo shoot what he called his 8-minute jacket. And it's a sport coat he literally bought in 8 minutes in a scramble for a customer meeting once. And so it's just the kind of guy he is.
All right, so you know this company like no other, and Tim mentioned you wrote The Everything Store, you wrote Amazon Unbound. Why is now a really good time to be writing about Andy Jassy?
Yeah. I mean, for tech companies right now, there is only one thing that matters, and that is, where are they in this great AI race? And do they have the leading models? Do they have the right partners? What kind of money are they spending on data centers? And this is what investors are watching and with bated breath, because the numbers are so large. And Amazon got a slow start. They had an opportunity to invest in Anthropic early, which they didn't. Some of their early models that they developed in-house haven't really been considered state-of-the-art. But I think it's become apparent over the past few months, maybe the past year, that Amazon's catching up in a number of ways. One, they've gone and Andy has formed partnerships with Anthropic, with OpenAI. OpenAI renegotiated its Microsoft deal essentially to avoid the exclusivity contract, so ChatGPT models could be on AWS, Amazon Web Services. Amazon redid Alexa. They call it Alexa Plus now. And they're making these chips, these Trainium chips that are in some ways competing with NVIDIA. And Amazon's offering is very Amazon-like. It's come to Amazon, you'll have a sort of menu of all the models, and you'll do it more cost effectively than you might elsewhere. And frankly, like AWS is now growing at a pace that it hasn't grown in a couple of years. Like the market has sort of turned. And so it does happen to be 5 years for Andy Jassy, but you can make an argument now that Amazon has caught up, and it is one of the names that is leading us, whether we like it or not, into this new era.
As you write in the piece, Amazon invented this category with AWS and cloud computing. Andy Jassy and Jeff Bezos sort of conceived this together years ago, and he was the head of AWS before he became CEO of Amazon. How did what he saw happening at AWS as a result of AI inform the way that he makes decisions about AI at Amazon?
Mm-hmm. Well, I mean, I think they have a very good sense for what customers want, what the demand signals are, and no surprise, I see this in my own kind of personal habits. I'm experimenting more with AI. I think everyone kind of feels it, and what Amazon saw probably earlier than most is that customer and corporate demand for AI services was maybe even higher than folks even anticipated. And so they're spending $200 billion in CapEx this year alone building data centers. We visited one of them in Mississippi. It's the lead to the piece outside Jackson, Mississippi. These massive buildings that are rising up from the clay. And basically, one thing that Amazon can do better than almost everyone, because they are so early to the cloud computing movement, is stand up these data centers, and they're doing them all across the country. They're putting their own chips in them, and they're promising that capacity to companies like Anthropic and OpenAI, who can't even themselves get enough compute. So it does seem to me that Amazon's pretty well positioned right now, particularly for the bull cases and AI adoption.
So does he have his LA raised girlfriend, now wife, to thank for him being CEO of Amazon?
Right. So I don't think so. I mean, we talk about Andy Jassy's history, and it was almost a peculiar set of circumstances that got him to Seattle in the first place. You're right that his wife wanted them to spend a couple of years earlier in their careers on the West Coast, and maybe Seattle was a bit of a compromise. But he went early to Amazon. He joined in 1998. It was just a bookseller. Andy Jassy pioneered the at the time it was CDs, so the music category on Amazon. He was early on the marketing team, and then he was the first shadow or sort of technical advisor to Jeff Bezos, which is basically the person that's going to follow the CEO around. And he became a kind of disciple. And then when they conceived Amazon Web Services together, he broke off and ran it with a lot of autonomy for 15 years. So it's this extraordinary story, probably lots of good fortune that he was there at the beginning of this momentous internet revolution.
But it wasn't always totally without speed bumps. You point out in the piece that, Bezos admonished him at one point publicly in a meeting, and, he basically said, why should I ever listen to you about anything ever again if you get these numbers wrong?
Ouch.
I mean, it probably wasn't personal. It was the sort of comment that, Jeff demanded excellence in meetings and had a brusque way, particularly early on, of conveying that. But, Jassy tells that story to illustrate to young people that this resonated with me, that even if, what are you concerned about when you go into big meetings with your superiors? Well, you're concerned that, you'll look foolish. And he said that there were instances when that happened, and the next day everything was fine, people moved on. And so he didn't end up worrying about that anymore. And it gave him new confidence.
I am curious, too, about the relationship between Jassy and Jeff Bezos. And I think increasingly we see people like Jeff Bezos or Tim Cook of Apple, they are the ones who are dealing with Washington and all of those issues. And then there are other folks like really running the company. But talk to us about, I mean, is Jassy involved in the politics and so on and so forth? Because Amazon, of course, as you know, has its fans and it has its foes, like of people who are really critical of the company.
Yeah, I mean, I think Andy does have his own relationship, certainly with the president and the White House. But I want to make one distinction, which I thought about a little bit and wrote about in the Businessweek Daily newsletter this morning, which is we are surrounded by leaders in corporations and even political movements who are kind of, inextricably linked to their organizations. And so you can't imagine, say, Tesla without Elon Musk or the MAGA movement without Trump. And, Bezos really did architect an orderly and model CEO transition. And he did it 5 years ago. He's kind of stepped out of the way. He's executive chairman. He's very involved as an executive chairman, definitely probably helping Jassy to manage Washington. Introducing and talking about evangelizing for new technologies. But, you have to give them credit, in this day and age when the key man risk, to use the SEC term, is so high at companies. Like he gave Jassy the reins and he really stepped out of the way. And I think it's worth saying at a time when, you've got Palantir or Tesla or SpaceX going public, where you can't even imagine what happens to the market value of one of these companies if the key guy, the key figure is no longer there.
And Brad, you make the point in the piece too that early on in the transition, he had to make some really tough choices as a result of some overhiring during the pandemic, a somewhat bloated corporate workforce that I think many would argue. How was he seen internally and externally as he was doing that? And what exactly did he have to do?
Yeah, probably not, very, very popular. He's laid off a good percentage of the company because of, as you say, there was overhiring during the pandemic. Andy also felt like Amazon was too bureaucratic. He wanted to remove layers. And then, of course, somewhat spoken, somewhat unspoken, you've got AI making the company more efficient. And, when you take opportunity away from people or you reduce the ability to promote, or people feel like promotions are closed off, it creates conflict and this is not unique to Amazon. This is probably across business, certainly across Silicon Valley right now. So he made some unpopular choices. He also killed some prominent projects like the Go store, that just walk out technology in supermarkets, Amazon Fresh grocery stores, different robot delivery, drone, delivery robot projects. But he's also placed bets elsewhere, like the satellites. They're creating a satellite internet service, and they're going to be opening a new supermarket, superstore in Chicago. Right. So, I think there's a lot of people who have a lot of respect for him, and like with a lot of companies, it's not unanimous.
Great deep dive. As you know, this company like no other. Brad Stone, editor of Bloomberg Businessweek magazine. Brad, thank you. His story, it is the cover. Find it on the Bloomberg and online at Bloomberg.com. He's, of course, the author of many books, including 2 on Amazon. Tim and I back in a moment.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red right now. The S&P 500 index pulling back from yesterday's record, now trading below 7,500, 74.34 where we stand, down 66 for the S&P. That is a drop right now of 0.9%. Stocks are falling as inflation jitters lift bond yields. The Dow down 480, back below 50,000, down 1%. NASDAQ and the NASDAQ 100 index also retreating from records. They too are down by 1%. The VIX just above 18 with a 10-year at 4.59%. We do have the 2-year currently yielding 4.07% and the 30-year 5.12%. Gold, $45.57 the ounce, down now by 2%. West Texas Intermediate crude, $105.55 a barrel. WTI now up by 4.3%. Ford shares down almost 7%. Its blistering rally screeched to a halt today as a broader market sell-off cooled enthusiasm over the automaker's potential to benefit from the boom in energy demand for artificial intelligence. This slump, by the way, follows a 21% two-day rally for Ford. Again, Ford shares right now down by roughly 7%. Round 2 of the PGA Championships underway in Newtown, Pennsylvania. At last check, three-way tie at the top. Alex Smalley of the U.S., Aldrich Paul Geeter of South Africa, and Australia's Min Woo Lee, all 5 under par. Recapping, S&P 500 index down 69. That is a drop right now of 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. So about a year ago, we were kind of coming off President Trump's Liberation Day, higher or uncertain tariff environment. We were kind of up in the air about a lot of things. And at the time, we were forecasting, put out a story at Bloomberg just ahead of Memorial Day, that the price of a cookout was going up.
Beef prices were an issue then, too.
Yes,
Yeah.
right? And that was,
Yeah.
well, the story got into a lot of the issues were domestic ones that were impacting the prices of things. And then I think about this year, Tim, what's going on?
Okay, U.S. war in Iran, higher
Right.
energy prices, higher gas prices, inflation prints just this week reminding us that inflation is outpacing wage growth. Not so good.
Not so great. So what does it mean for our summer picnics as we get ready? Please, please, to kick off summer. It's just around the corner.
It was felt like 45 this morning. That was the feel like temperature.
I still
51
had-
degrees in New York
I
this
still
morning.
had layers. I hear it's going
Yeah.
to be like 80 degrees on Sunday.
Yep.
For more, let's head to Stu Leonard's Wines and Spirit store. It is in Norwalk, Connecticut. That's where we find Blake Leonard. She's the president of Stu Leonard's Wines and Spirits. She's also part of the next generation that will take over running the store founded by her grandfather. She will take the reins as president along with a cousin from her dad, Stu Leonard Jr., keeping it in the family. I love that. You are a certified sommelier from the Culinary Institute in Napa. You've worked for many other families, too, in the wine business, including the well-known Gallows. Blake, welcome. How are you?
Hey, thank you so much for having me today. And, since it's Friday, I wanted to start off just cheering you with an Aperol Spritz right here.
Oh, my God.
I feel like she's seen Stu Leonard do this a few times on our show.
Yeah.
Learn from the best.
I love you.
runs.
I
It
love
runs.
you, but I do resent that there wasn't one sent to us. That's all I'm going to say.
I know.
I'm just going to say.
I think the interstate liquor laws, it's a big issue. Truly.
That is true.
Yeah.
I don't know.
Okay.
Maybe
Maybe we
I
can
know,
pick some
but
up. Carol.
We'll figure
we're
it out.
right here in Spritz season now, so I'm excited.
Hey, talk to us, though, about the environment before we get into the summer season, what people are interested in terms of wines and spirits. But talk to us about the consumer, what you guys are seeing.
Yeah, well, I was the other day just visiting one of our wine suppliers, and he was saying that it cost him over $2,000 more just to get a container of wine here into the U.S. right now. And that's, just one part of the whole transportation piece, for getting wine into our wine stores.
Wow. So you couple that with actually selling the wine in a time when we're hearing more and more about young people not drinking as much, this idea of dry January actually lasting the entire year. What does that mean for the overall business?
Well, you also see customers here on the store. And I was just talking to a lady the other day who was just talking about how much more it costs her to fill up her huge, van that she drives with all her kids in the back. So, everyone here on the store floor is definitely feeling it. I think one good thing, and I was hearing all the stock prices before, but about being a family business is that we can, work with our suppliers and hold those costs. In a lot of instances, we'll split, that transportation cost with our suppliers so we can keep prices here on our store floor family friendly.
And you guys have not yet seen price increases, my understanding is, due to fuel, correct?
Yes, we have not. Here in the wine business, as you started off with the tariffs, that was big last year. And for this year, really no one wants to raise the price of wine right now. And I always look, this is a great new rosé that just came in. It's a new fresh vintage, but we're retailing this under $15. And if I were to go and sell it over $15, what happens to sales is they go down. So you really have to be price sensitive with those barriers there. And we look at it as hopefully a temporary thing and, trying to look at the longer picture.
Is the idea on it with a product like that, and if I'm thinking about margins correctly, that you take a little bit of a hit there, but you get people in the store to buy that, and then they buy other things that don't have that have bigger margins?
Yes. Well, and one of the things that I love doing is I'm like a little, wine detective out there, but I love going every year. We go to a wine show, either in Paris or in Italy. And we get to meet firsthand with a lot of these multi-generational families who are making unbelievable wine. And we get to bring them back and sell them in our stores. And really, they're wines that over deliver for the price. And we often say they taste like they're twice the price. So really trying to bring not only the price point, but also the story back for our customers, because we think that now more than ever, that's what customers want to hear about.
I'm always amazed, like when you're over in Europe or Paris and you just order, I don't know, just a little wine, nothing big, and it's just great. Like, I feel like over the years, and you know this industry, like it just feels like, you know, we keep getting told you don't have to spend a lot of money to get a great bottle of wine.
Yeah, no, you don't. And you know, right here, this is a Corsican rosé that I have, and this is also one of our best sellers. It's a Provence rosé, under $15. A female winemaker. She won the top 100 winemaker. You know, one of the top 100 winemakers in the world. She was awarded a couple years ago. So there's great value out there. You do have to, you know, spend time looking for it, but that's what we really strive to do for our customers here on the store floor, as well as educate them.
So let's talk a little bit about the next generation of Stu Leonard's and sort of the timeline for you and your cousin taking over. And also, I'm curious about, with a background in wine and spirits, what you can then do in your approach to the grocery business, a historically low margin business, a very challenging business that, you know, you have to work with the ups and downs of the economy and the macroeconomic environment. What is your plan for Stu Leonard's when you take it over?
You know, yesterday, all of my cousins and my dad, you know, it was work, but we got to spend the day all together in the city listening to other family businesses talk. And it was a really awesome day. But one of the biggest takeaways I had listening to Jim Perdue speak, and we got to meet him afterwards, and hearing Enterprise as well and Panda Express, they all stick to their core values. So no matter what happens, is sticking to their core values. And when I look back at our business today, you know, I grew up drinking milk from Stu's, and my kids today, they're also drinking milk from Stu's, but it's organic. And so, you know, if we had 20 years ago tried selling organic milk, it would have been way too expensive to really for our customers at that time. But we've evolved, and so it's kind of just a slow evolution over time. And that's, you know, one of the things that always sticks out to me, is that my kids are drinking organic whole milk now.
Blake, I just want to mention, we have a headline crossing from Reuters. SpaceX picks the NASDAQ as its listing venue for its massive upcoming IPO. On that, do you guys ever think about going public?
We've definitely had offers, and we have, you know, offers to either go into partnerships or to be purchased. And it's always something we think about, because in my generation, it went from 4, in my dad's generation now, to over 13 of us. And now in the 4th generation, there's over 22 great grandkids. So it's definitely something we always think about, but really what we want, and, you know, my cousins and I all just met recently to talk about this, is we really want to keep this a family business and want to continue, you know, the decisions we get to make every day are really, you know, ones that we don't have to rely on anyone else for that. So
listen, so fun to catch up with you. Stay in touch.
Thank you very much.
Especially as we kick off the summer season. Blake Leonard, she's the president of Stu Leonard's Wines and Spirits, joining us out there in Connecticut.
Coming up next, stocks on the move. Once again, a redhead crossing the Bloomberg terminal. According to Reuters, SpaceX picks NASDAQ as its listing venue.
You're listening to Bloomberg Businessweek Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, we are getting ready to head into the last hour of trade on this Friday, and also for the week overall. Carol Masser, Tim Stennebeck, live here at Bloomberg headquarters in New York City. We'll talk about the equity trade because, it's important. Down about 66 on the S&P 500, despite a week where we've had a couple of records, down about 0.9%. We're down almost 1 full percentage point on the NASDAQ 100, 0.9% lower on the Dow Jones Industrial Average. But we've talked a lot about what we've seen in the Treasury trade as we've seen a global bond rout. You've got a 10-year note with the yield of 4.59, so we've just seen this move up. 2-year note, shorter end, 4.07. 4.25 on the 5-year. I know Tom Keene was talking, I think, about the 30-year that has bumped up a lot as well. But you have just seen rates around the world go up on really concerns over the price spike that we've seen, particularly in energy companies.
Yeah, it's just interesting that it's happening today, and it took,
I know.
That's
It's not
something
like it's
that's
new,
notable.
right?
Exactly. Yeah. What happened yesterday or early today that would actually spark this?
Yeah.
I'm looking at the stocks too, Carol. Off its worst levels of the day, down 2.7%.
Yeah.
In the stocks, 30 components, 6 stocks in the stocks are higher, 24 are lower.
Yeah, which is very different from what we've been seeing as of late. I'm Carol Massar, along with Tim Stanovic. Let's get to some stocks on the move for you. With us to do that is Bloomberg News equities reporter Avalon Purnell. She's here in studio. Good to have you here. Let's start with Boeing.
Absolutely. That's ticker BA. It's currently falling about 3.1%. That's after the airplane manufacturers received a smaller than expected order for jets from China. Trump said that China would buy around 200 aircraft, though he later suggested that maybe they'll buy up to 750. The details remain murky, but Melius Research is writing that while China is a large market, maybe it's not as important as it once was for Boeing. And more specifically saying that you can't be 100% sure that you'll even get those jets sold.
Because that's the problem. As George Ferguson pointed out yesterday from our Bloomberg Intelligence team, that has been the challenge with China orders in the past. And you pointed this out yesterday in the newsroom, Carol, a commitment to buy something doesn't necessarily mean that plane will be delivered.
Right. Exactly. Trade tensions are something that he mentioned, also geopolitical. If something happens with Taiwan, all of these things could impact those orders.
Yeah, right? You want to see signs, and make that...
You want that plane to be delivered and that money to be...
Exactly.
I want the deposit. Yeah. I want a big deposit because these things are expensive and it takes years to build them, right? You want to go to Microsoft?
Yeah, let's go to Microsoft.
Yes, that's ticker MSFT, currently up about 3.9%. Biggest intraday leap in about a month. That's after Bill Ackman said that Pershing Square has built a stake in Microsoft. It's really capitalizing on the recent declines in that company's share price. He said that Microsoft's 365 products remain deeply embedded in large companies, which we already know. We use Word, we use Excel, and strong demand for Azure shows that maybe some of those concerns that investors have about Microsoft's growth are likely misplaced. Also worth noting that while Microsoft shares are up, Google's are down a tiny bit. So that's Alphabet's parent company, after he said that he sold Google in a response on Twitter as well.
And it's interesting. Microsoft's down about 12% year to date, right? So, he just is out there kind of endorsing the company, right? He's not pushing for any kinds of changes or board seats or anything like that.
Not yet. Okay. But who knows? That could come later.
Yeah. Sorry, I'm just speculating.
Okay, what's next?
Dexcom, another question of
this is on Carol's list today
investor.
too.
Is this the number one gainer in the S&P and the NASDAQ 100? It's like all right, tell us the story.
Yes, that's ticker DXCM. Had to bring something from the healthcare world. It's currently up about 5.9%, most intraday since February. That's after activist investor Elliott Management took a stake in the diabetes company and struck a deal to name at least 2 independent directors to their board. Separately, Dexcom also offered a really rosy long-term outlook at its investor day earlier this week. Also worth noting that Dexcom CEO was actually on BTV earlier today.
And said,
he said that customers taking GLP-1s have actually higher utilization of their products, which that's always been a concern for investors of what exactly happens if people are taking GLP-1s. Do they really need these continuous glucose monitors?
Well, they still want to monitor it. Maybe
for those who have diabetes. Absolutely. I know people. And these meters are kind of game changers because you have apps and you can constantly monitor and they've worked really well.
And this company also sees the next opportunity being those people without diabetes who want to monitor their glucose too.
Yeah. Like I get it. I totally get it.
He was also on our program back in January. He joined us from CES, the Consumer Electronics Show. Jake Leach, the president and CEO of Dexcom.
No, it's, you look at the population in the United States, but growing around the world of folks who are dealing with diabetes, and GLP-1 drugs are certainly going to help, but nonetheless, for those who've got it, it's a great way to monitor. So interesting to see. But I was kind of surprised, right, to see such outperformance among all the names in those major averages. Avalon, thank you. Really appreciate it. Avalon Purnell, she's Bloomberg News equities reporter right here in studio. For more conversations, be sure to check out our Stock Movers podcast. 5-minute episodes, big winners, big losers. You can find it on Apple, Spotify, or anywhere. Get your podcasts.
Hey, we got a great program coming up next on Bloomberg Businessweek Daily. If you are sticking with us on radio, YouTube, and Bloomberg Originals, Joe Doe's going to be joining us because we are talking rare earths. They took, a big part of the backdrop of the China visit was what we're doing with rare earths, what China's doing with rare earths. Well, Bloomberg News out with a great story. The U.S. needs another decade to fix the $1.2 trillion rare earth crisis.
I think about the conversations we've had with folks in that space. And again, it's like a lot of focus, a lot of money, but the needle hasn't moved very far in terms of U.S. production when it comes to rare earths. Stick around, folks. If you're watching on TV, the close coming your way in just a moment. Tim and I continue on radio.